Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for May 20th, 2024. Well, I hope everyone had a great weekend. You're ready to all rested up and ready to settle in for another wild week in the market. Let's take a look here quickly what happened overnight. First off, if we take a look at Asian markets were green across the board last night, doing pretty well with the Nikkei up 282 or 0.73%, while the other indexes were a bit more on the modest side. If we take a look at European markets this morning, European markets are mostly higher this morning with modest gains across the board, except for the FTSE MIB, which is just slightly lower. And then if we take a look at the U.S. futures, we're green across the board here as well, with the NASDAQ getting the biggest push up 0.19%, which kind of modest overall on U.S. futures. Let's take a quick peek at oil. Oil moving slightly lower here this morning, only down 17 cents though at 79.89 a barrel. Brent is down only a nickel at 83.92 a barrel, and natural gas is up 2.1 cents. If we take a look at precious metals here this morning, now our precious metals are really moving higher right now at the moment. Gold futures are up $22.50 an ounce. It's been up over $24 an ounce so far this morning. We've got silver up this morning strongly, copper, platinum, and palladium all looking higher this morning. And then if we take a look at our cryptos, we have cryptos also showing bullishness almost across the board here today, but just starting to weaken from the highs just a little tiny bit. Let's take a look at our bonds. Bond yields kind of sticking in there, not much movement here overall in the bonds. The 2-year bond is at 4.82%. The 10-year bond is at 4.42%. And the 30-year bond is at 4.56%. So still quite an inversion going on those two 10s, and we'll want to be keeping an eye on that. As a matter of fact, over the last couple of weeks, that inversion has worsened. So be kind of careful there. If, let's see, I think that's it. That's all the things I wanted to cover here this morning. So what does all of that mean? Well, how about we settle in? Let's buckle up. Let's get ready for the Monday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these charts, shake off a little bit of bias. Let's see if we can see how we might want to approach the market for today. First off, if we take a look at the diamonds here, you can see our diamonds is holding in a very, very bullish pattern. Complete upside rush here over the last a dozen or so trading days has just mostly been a rush to the upside. And I think one of the reasons that we're seeing that on relatively low volume on average is because of corporate buybacks. Corporate buybacks are the largest buyer in the market right now, and they're continuing to push this on higher. And with most of those companies out from under their blackout period, I would suspect that could continue here as we move along. And also there may be a little bit of I was reading a story, there may be a little bit of a fear trade going on here by the corporates, just simply because they're really starting to envision a possible administration change and a possible rule change that could maybe limit corporate buybacks, and so maybe they may be trying to get it all done as they can. But one of the interesting things, according to Goldman Sachs, The CTAs, they want to be buyers. Those are their computer systems out on the market with just algorithmic trading machines that trend or trade the trends of the market. Well, what's interesting is they want to be buyers in those systems, but they're almost redlined, which means that they are almost maxed out as much as they can buy on those systems. So kind of an interesting setup here coming into this week. If we take a look here, though, we've got our Dow very bullish and every reason to believe this could continue higher. If the bulls can continue to push, well, we would see if we could break the wick of that little candle right there. And if we can, well, then guess what we're going to do? We're going to set some new record highs in the market. There's blue skies above there. If the bears were to find some inspiration here today, then a press back down, into this little support area would not be out of the question. Now, you want to consider the possibility that depending on how you draw this trend, we're a little bit away from this trend. It is also very possible that we could just stay right in here and consolidate this for a while, maybe move out here, relax a little bit in the market, and I'll tell you why I think that could be a possibility. But if the bears were to push beyond that point, well, you can see some of these levels in the chart. We'd probably come back down and test the low of that candle, pushing on below there. We'd probably come down into here. And of course, that's going to get into addressing and dealing with this upside trend here in the market as well. Let's take a look at our SPY. SPY also moving up, and you can see this upside trend just is really pretty steep, and we had this little bobble that pushed us out of this trend for a little while, but you can see very, very strong. And once again, that possibility that we could end up continuing to consolidate right in here out to this trend. We got a little bit of a bullish push going on here this morning, so if we can break the high of that wick up here, well, blue skies in the S&P 500, and every reason to believe that's possible. If the bears, however, were to find some reason to attack, well, a little bit of press back down here to test some of these support levels, and then of course the bottom of that big white candle right there. And if we were to break down below there, if we lose that support, well, you'll notice there is a gap here that could be filled in that chart, and of course that would challenge this trend, and then that possibility that we could come down into these areas of the chart. If we, by the way, if we take a look at our moving averages in here, one of the things you want to note is that we are very stretched away from our 50-day moving average. So a consolidation or a pullback should not be out of the question. Despite the corporate buybacks, we are very extended here in the market. So you'll want to be considering that possibility. I would really suggest, if you're long these stocks, continue to raise those stops and make sure you're protecting yourself, because at any point in time, we could start to see a little consolidating pullback begin in the market. And that doesn't necessarily have to be bearish. What we may be seeing here with the dropping of the volumes and things like that and the corporate buybacks is just a little bit of a rest here in the market, providing that consolidation. If we take a look at our QQQ, well, QQQ trying to get a little bump here this morning as well. You can notice in here we may be stretching up, continued up here, broke through up in this area of the chart. Blue sky above, if we can get above the wick of that candle right there. And once again, we may be resting in this consolidating pattern, so don't be too surprised if we have to rest a little bit longer in here. Very, very bullish pattern. However, if the bears were to find that inspiration, well, you can see that if they push down into here, we'd be testing that trend here to the upside and testing some support. And you'd want to notice that there's also a gap down here. If we were to fall that far, we could drop into that gap. And then it gets a little bit concerning here for the market, maybe a little bit more rest would then be due, or a little bit more consolidation might be due, pulling us back down into this area and maybe looking a little bit closer to that 50-day moving average. And then if we take a look at our T21, whoops, let's not do that. Let's look at our Russell. Our Russell, as you can see, just resting against this resistance here in the chart, and we're pretty darn close to that trend. So remember, this up here would be a multi-year high breakout, and that would be a big deal here for the Russell. And this resting pattern in here probably sets up the most bullish pattern that we've seen to maybe break that into that area, and then we've got to prove to hold it. You'll notice that we have had a couple attempts to break through, and we were unable to hold it. So what we need to see is those bulls pushing up into here, and then get up here and hold that area in the chart. And there's every reason to believe the enthusiasm in the market that that is possible. So watch that carefully. And if we can do that, then we'll start looking at resistance levels in the chart that go all the way back to 2021 and 2022. So watch that carefully. Now, if the bears were to find inspiration, well, as you can see, breaking down below here, we could give up that little bit of trend. And if we were to break down through here, I'm suggesting we'd come back down here, no big deal, into a little bit of additional support, and then right down in here to a little bit more support, and maybe just a resting consolidation that could bring us back to the 50-day moving average, or perhaps consolidate long enough that the moving averages can catch up. Let's take a look at our VIX. Our VIX continuing to fall, as you can see, very, very weak on the VIX. We're at new lows as of Friday, even though volume and price action in the market on Friday was pretty modest and weak, very choppy price action. You can see we have now dropped into the 11 handles here on the VIX, and we're starting to show that extreme complacency here in the market. So once again, be really careful here. Make sure you're setting your stop losses. Don't assume that the market's never going to fall again, that it's never going to pull back. When we start hitting complacency levels like this, it kind of means that everybody that's going to be in is in. And if we start to move the other direction, we will tend to see a pretty fast run to the door to protect capital. So watch carefully here on the VIX. And then let's take a look at our T2122. Our T2122 indicator, we were pushed up here into that bearish reversal zone. And as you can see here on Friday, we faded back. More stocks selling than going up, although we had that impression by looking at the indexes that it was just copacetic everywhere. Everything was just really, really bullish, but not so much. We had that little fade back here, but this doesn't hurt anything at all. If we can find bullish inspiration today, this actually opened an opportunity for us to push back higher if those bulls can find something to respond to. If the bears, however, find something to respond to, we do have to keep in mind that we have a big opportunity for a downside if those bears were to engage. I'm not saying they will, but we should be watchful for that possibility. And once again, raise those stop losses. Start thinking about how many days to the upside we have been up, almost straight up, that if they start coming in, there could be a profit-taking wave that could move us lower relatively quickly. So please consider that carefully and raise those stop losses. If we take a look at our T2108, better hit T2108. T2108 had a little bit of a turn here right at the end of the day. This was flat to down most of the day in the market, and then right at the end of the day we had a little bit of a turn back up here on T2108. But you'll notice we got a little high here in this chart. We got some price resistance in here. We're going to need some inspiration to maybe push on up, and of course we have this downtrend that we could start pushing up to test here in T2108. If the bulls can push on through there, then hey, we may be ripping here to the upside and getting pretty frothy If, however, the bears were to find inspiration, we've got some good support levels down in here, so no particular worries at this point. And remember, that 50% area will be pretty critical here for the market. If we take a look at T2107, T2107 also hooked up just a tiny little bit at the end of the day, pushing up in here, and as you can see, trying to press into some of these resistance levels of the chart. Once again, when we get up into this area, we start to get a little bit on the frothy side, little bit of room left to move up here to hit some of these peaks, but then we'd have to worry just a little bit about that possible pullback in the market. And then, of course, if we do start to pull back here, we've got plenty of support areas in the chart, and we're showing very healthy here, well above our 50% area here in T2107. So bulls are clearly in control, but maybe getting a little bit extended here. Let's take a look at our T2101, and we can see why we had that lethargicness on Friday. We just didn't have a whole lot of things to be inspired by, and you can see the market breadth continuing to decline. And we'll want to watch that pretty closely. If we can get some bullish inspiration here today, we might see that start to turn back up, and that's really what we want to see. If you're a bull, we want to see that breadth coming around, pushing to the upside, showing that that energy for the move is coming in. If you're a bull, the last thing you want to see is this continuing to fade. And unfortunately, that does have a possibility here for today, because we really don't have a whole lot on our economic calendar to provide inspiration. As a matter of fact, for the next 2 days, we're just going to get a parade of Fed speakers. You can see we've got Bostic, Barr, Waller, Jefferson, and later on this evening, Bostic will be speaking again. And we've got a couple of bill auctions in there. Despite that, not much here, and we know that those Fed members have continued to be a little bit, well, not a little bit, they've been hawkish, saying higher for longer, not changing rates. So if anyone says anything in here surprising, either hawkish or dovish, look for the market to respond to that in either a bullish or a bearish way. And then, of course, if we take a look on Tuesday, same thing occurs. Barkin, Waller, Williams, Bostic, Barr, Bostic again after the bell. We've got a lot of Fed speak coming the next couple of days, with not much else in here. Some bond announcements on Tuesday. It won't be until we hit Wednesday that we start getting some economic data that could be market moving. You can see we got mortgage applications, we've got existing home sales. We're going to get the Atlanta Fed inflation expectations. That one didn't work too well for us last time, but it's not one that moves the market all that much. We've got quarterly service survey. We're going to have the petroleum status, a couple of bond auctions in here, and then we're going to get the Fed minutes on Wednesday. Looking into Thursday, if we take a quick look at that, we've got jobless claims. We've got Chicago Fed national activity, PMI flash, new home sales, natural gas, a whole bunch of bond announcements, where there will be Kansas City Fed manufacturing numbers in here, bond auctions to be paying attention to, Bostic speaking again, and then the Fed balance sheet. At the wrap up of the week and heading into a 3-day weekend, something you guys will remember, next Monday is Memorial Day, and we'll have a 3-day weekend ahead. So consider that as well. There may be some risks going into a longer term weekend. Durable good reports. We've got Waller speaking again. We've got consumer sentiment, Baker Hughes rig count, and we're going to have markets closing just a little bit early here on some markets closing here just a little bit early on Friday due to the Memorial Day holiday. Let's take a peek at some charts here for the market. First off, some of the things that we're going to be looking at on the economic calendar here today. our economic calendar is showing us, well, just a few notables here this morning. Let's run through them really quick. GLBE will be reporting this morning. Looks like we're getting a nice pop on Globe. Nice move there. We've got LI. Maybe going the other direction, not quite so happy here this morning. And Wix will be reporting this morning. It looks like we're already getting a nice bullish pop on that as well. This afternoon, our notables, KEYS, NDSN, Palo Alto will be in there, and we're going to get Zoom will be, better type Zoom. Zoom will be reporting this afternoon. That's it for the notables. So pretty light on that earnings calendar. We do pick up a little bit as we go through the week. As typical, Wednesday, Thursday will be our biggest days of earnings reports this week. Let's take a look at some stocks that could be setting up. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. I just want to say thank you so much for everyone who does take the time to do that. I do truly, truly appreciate it. And remember, even an emoji counts as engagement with the video. So thank you so much, everyone who does take the time. Also, just a big shout out to everyone who continues to support the channel through the Buy Me a Coffee link just below the title of the video. You guys are truly awesome. Let's take a look at some of these stocks setting up. And remember, these are not recommendations to buy or sell any security. You need to do your own due diligence. Be very, very careful in this market. And remember, you should never, ever blindly follow anyone else's trade ideas. You should be following your guidelines and your risk tolerances for every trade. First off, let's take a look at a couple things here in the market that I think could be setting up very well. Take a look at TLT, our treasuries. The 20-year treasury, there is something going on here, and I think there is a possibility that we could end up with a full-on squeeze here to the upside in bonds. And the reason I say that is the Chinese yuan, the Japanese yen are both having major problems. And I think one of the ways that they will probably be solving that is buying treasuries, buying U.S. debt. So you'll want to watch this carefully. If that starts to trigger, we'll see the big banks jump in on that as well, and they'll start pounding this to the upside. So watch this carefully. TLT breaking through up here in this chart, resting and pulling back. It may have some more consolidation in here to do. Don't be too surprised if this has to rest for a while, but I would watch that carefully here in TLT and that opportunity for a nice upside move here on U.S. debt. So watch that carefully. And clearly we see in our national debt, we're in no rush to stop spending. So we certainly need other countries to be buying up that debt quickly because our spending continues to run out of control. If we take a look at BND also breaking this downtrend here and holding right in here on this trend, a little higher low. So here's a Vanguard bond fund, might be another thing that you might want to be paying attention to for that potential squeeze to the upside here on bonds. Now, when that happens, I'm not exactly sure, but watch carefully for that possibility. Other places that we're seeing some things going on, and we've been seeing this for a while, and that's looking at gold. One of the things that China's been doing a tremendous amount, China, Russia, India, there's been a lot of countries buying up massive quantities of gold. Something is going on in their currencies. They're trying to protect themselves. Gold continues to be quite a runner, and here we are up here at all-time highs in GLD. Keep a close eye on that. Every reason to believe that that could continue. We're certainly stretching up here solidly today. I would also advise everyone to tighten up that stop on this, because as we stretch here to the upside, we could expect some selling to occur at any time. Any kind of rest or pullback in here should not be out of the question here in gold. If we take a look at silver, silver also just running hot, really pushing up here to the upside. If I back this out, and I'm going to go to a weekly, you can see that we still have more upside that we can go here in silver, considerably more upside that's available here in silver, not at all-time highs like gold. So keep an eye on silver, looking really strong here overall. Now, when we see all of these currency fluctuations and all of this commodity type buying going on, we do have to worry a little bit about the US dollar. If you take a look at UUP, we're starting to show a little bit of that weakness in here. And if we see that downtrend going on right here, as we rallied back to this price resistance area, I would watch for that opportunity in here that the dollar continues to weaken. Now that doesn't help us with our debt situation. It only makes it worse, but it would certainly help out other countries a lot if that started to weaken. It would help out the yuan, it would help out the yen, but watch that closely in here. This could get nasty if this really starts to sell off. We could see gold, silver, those kind of things continue to rise. For you crypto folks out there, we could see cryptos really run to the upside. The opposite is true, though. If we get some news from the Fed of the next few days of all of these Fed talkers in here, if they remain hawkish, we could see those bond yields move back higher, strengthening the dollar. So watch that carefully in here. Kind of an interesting setup here when it comes to our currencies overall, and what that might mean in the ramifications for any commodities. Now, you guys know I have been talking a lot about some of our commodity ETFs, corn. Nice strong pullback here the last few days, but notice this support that we've got in here. It really depends on whether or not the dollar weakens or strengthens. If the dollar continues to weaken, I would look for the opportunity that corn could move on higher. Take a look at soybeans. Soybeans, really nice bullish pattern here, breaking through some resistance, and we're resting this back toward this trend. Watch this area in here. If this holds, look for that opportunity for soybeans to make that pop to the upside, particularly if the dollar were to begin to weaken. Watch that closely. And then, of course, wheat. Now, wheat has another problem here. We've moved down the last 3 trading days, coming back in here to trend and support. But the situation that we have here is the Ukrainian war. Of course, a lot of wheat is picked up or grown in Ukraine, and that war doesn't seem to be going very well here at the moment for Ukraine. So keep an eye on this carefully. I would suspect any news out of Ukraine could really start to push these wheat prices higher. So watch that carefully. Then if we take a look at the oil sector, oil will not be out of this. I guess I better go to XLE instead of type oil. The oil sector will also, energy prices will also see that possible move to the upside if that dollar continues to weaken. So watch this closely. You can see we've got a nice little bullish pattern that came in here. We held that little support area in here, and we're breaking back through that little downtrend in oil. So as this pushes back up, look for a little rest, look for your next entry possibility into that trade on energy. Watch those closely. There are quite a few out there to pay attention to. And in particularly in energy, take a look at UNG. My goodness, natural gas finally starting to come around. There for a while, it looked as if, well, we would never need actually need natural gas again. But I think everyone's starting to realize the EV craze may be slipping here just a little bit, and that it's not as reliable as we'd like it to be yet. It may be in the future, but a little bit of a concern going on here. The honeymoon, I should say, seems to be over on the EV. Now watch this closely. Breaking through this resistance, any rest or pullback in here, I would be looking at UNG. You could also look at Boyle. Very nice pattern, breaking here to the upside. Once again, a little extended in the short term. Might need a little rest, consolidation, or pullback, but keep an eye on that. And of course, if the dollar weakens, it's going to help this commodity as well. So watch that carefully here on some of those natural gas plays in the market. Let's take a look at some other areas. Take a look at the financials. Financials are showing lots and lots of strength. They've been up so many days, however, I would expect a little resting consolidation to occur at any time in there, and then you'd look for your opportunity perhaps into that trade. So watch that pretty closely. And there are a ton of stocks out here looking good, particularly in the tech sector. I noticed Meta could be setting up. There's that downtrend here. We've had that big sell-off here based on that earnings report. We rallied back to this resistance, and notice we're trying to hold this little higher low in here. If we can find that inspiration here in the market, look for that possibility that we could pop that resistance here, start moving back up here in Meta. And of course, you need to be taking a look at AMD. As it pushed up here, we're pushing into a resistance area in the chart. Any rest, pullback, consolidation in here that holds that trend, I would look for that next opportunity into AMD. So I'm running this video long. Hope you guys found this useful today. Thank you so much for being here. Thanks so much for the support of the channel and all of the kind comments that you guys provide. I truly, truly appreciate it. I want to wish you all the very best today, and I'll see you right back here bright and early Tuesday morning. Have a great day, everyone.